Hey everyone, Coach Investor back to another Intel video for today. So the company reported earnings yesterday after the market closed. When I'm filming this video, the stock is actually down over 8%. Now you might ask yourself, what has been going on with Intel? How come this fairly valued, let's say non-growth stock is taking such a big hit? Well, the big headline, if that's what you want to hear, is the same thing that they mentioned actually in the last quarter, and that's the same reason why the stock has gone down in the last quarter, 5% as well. And that's basically because, well, they guided for the next 2 to 3 years to have lower margins, still over 50%, but just lower than right now. In this quarter, they reported about 57% gross margins, so pretty nice, above their estimations actually. But for the next 2 to 3 years, since they're going to invest heavily in their business to catch up to those competitors, whether it's AMD, whether it's Nvidia, or other players out there, they're going to invest heavily in their own business. So this is basically, again, a short-term pain for long-term gains. Now, if that's all that you wanted, or maybe if you want more information, you don't have time to listen to this video, I will have a full summary in my Substack. It's free for everyone. I basically cover all the big companies that report their earnings and release it to you guys on Saturday completely for free. If you want to sign up, link will be down in the description and in the pinned comment. And also, I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. All right, I'll try and keep it as short as possible. We're going to go over the key highlights from this earnings report. And then at the end of this video, I'm just going to share some information on how Intel is actually planning on expanding their lead on AMD, and then maybe in the GPU market on AMD and Nvidia as well. And if you can't wait until the end of the video, basically they are taking away their engineers. How do they do that? They've got more money, so pretty easy. Now let's jump into the earnings report. All right, so first up, the total revenue is $18.1 billion, just an increase of 5% year over year. But this was also actually a miss from their own estimates and from the streets as well. I believe it was 18.3 billion. So there's a miss on that, but there was a very big beat on the earnings per share. As we can see here, earnings per share came in at $1.71, up 59% year over year. And that was actually 61 cents above their July guidance. Now let's quickly go over their various segments here. So the client computing group is down 2% year over year to $9.7 billion. What they said during the earnings call is basically, well, this is the effect of a shortage. Also some effects from Apple, because, well, we all know that Apple has left Intel, and then probably AMD taking some market share from Intel as well. Now the data center segment actually grew 10% year over year to $6.5 billion. Now, even in that segment, they said that it could have been better, mainly because of some issues in the Chinese market. We've all heard about what's going on in China with regulations, etc. So the companies there really need to evaluate what's going on. In the earnings call, again, they said this is going to take a quarter or two until they get back to normal. Then Internet of Things grew 54% year over year to $1 billion. I believe this is a record overall. Mobileye, which again is an underrated segment for Intel, grew 39% year over year to $326 million, a quarterly record. And then Programmable Solutions grew 16% year over year to $478 million. Now, as for the full year outlook, we're going to switch it around a bit. So they expect for the full year revenue to be $73.5 billion, basically flat year over year, and nothing has changed from their previous outlook. For gross margins though, they're still at 57%, down 2.4 percentage points year over year, but up 0.5 from their previous outlook, and earnings per share of $5.28, an increase of 48 cents from their prior outlook, and it's up 4% year over year. Now again, like we said at the start of this video, for the gross margins, they expected to take a hit for the next 2 to 3 years. As we can see here, capex is expected to be between 18 and 19 billion dollars, and free cash flow to be approximately $12.5 billion, which is actually higher than their previous estimations. Alright, now let's talk about how Intel plans on turning their ship around. I've covered Intel a couple of times on this channel, talked about their various plans and why Pat and his strategy might actually work in the long term, and if it does, I do believe that Intel might become a $1 trillion company. That video you can find in the top right corner. But if I heard correctly, during the earnings call, they said that they already hired 6,000 new engineers. So with the nature of Intel's business, AMD Nvidia as well, basically the semiconductor industry, it really doesn't take that much to turn a ship around. If you have a couple of great engineers, or maybe the best ones out there, probably the best ones out there are working for Apple and Tesla, but let's say for the semiconductors industry, Intel, because they have so much power, because they're still the biggest ones out there, it really just takes a handful of great engineers to turn a ship around. It's not like a restaurant or a video game, etc. It's science here. If you can hire someone that has the knowledge, that has the experience, it's probably going to work and you're probably going to be very successful as a company. So what has Intel been doing? They've been hiring some engineers from AMD and from EA as well. You might ask, why EA? Well, because they want to go into the GPU market. They actually have a product to launch in early 22. So obviously taking someone with gaming experience makes total sense. So first up we have is this dude, Vineet Joel or Goel, I don't know how you pronounce this name. Basically Intel hires top AMD GPU architect to lead XeIP roadmap. Again, taking those great engineers from a major competitor might make sense in the long term. He was previously the corporate vice president of GPU architecture at AMD, where he managed the company's GPU IP architecture team, so not a small hire. And before AMD, he was actually a director of GPU architecture at Qualcomm, where he led architecture development at the company's Adreno GPUs. And it doesn't stop there. Like I said, they've been taking more people from AMD and from EA as well. So here we can see that they've hired former EA and AMD managers ahead of its Arc GPU launch as company steps into PC gaming hardware. So first up here we have Andre Bremer. I will pull up his LinkedIn profile so you can see it better. He previously was a manager of the Amazon Web Services, Game Tech, and even worked as the head of engineer for Prime Gaming. Then they also hired Michael Heilmann. He was reportedly a director of technology over at EA and was a manager of content over at Sony Computer Entertainment. So again, someone that will probably bring a lot of value as Intel goes into the GPU market. And now let's talk about the ex-AMD employees. So first up, they hired Steve Bell as the company's senior director of game developer relations. He has worked at AMD for 13 years. And lastly, Richie Corpus is hired as the company's VP and GM of the whole game ecosystem business development and developer relations. He was previously at AMD for 15 years, working as the head of worldwide gaming as well as professional software. Alright, so to conclude, like I said in my past videos, it's going to take Intel a while to turn their ship around. Now, with the shortage that we're in right now, the whole semiconductor industry is taking a hit. Could this be a positive for Intel right now? I think it could be, because this means that AMD is probably slowing down, Nvidia might be slowing down as well. So Intel maybe has more time to catch up to those companies. Now you might ask, how will they do that? Like I said in my past videos, with TSMC, for example, Intel basically came to them and said, look, we're willing to pay more than the others. Obviously, TSMC is not going to say, no, we're not taking more money. They're probably going to do that. And that's why reportedly Intel has become one of TSMC's larger clients. This will probably hurt AMD in the future as well. Again, AMD is reporting earnings, I believe, next week. So we're going to have to wait for that. But again, I want to reiterate that I know very well what position Intel is in right now. I know that they're still the biggest one out there. I know that they were struggling in the last couple of years to keep up with AMD and with Nvidia. I know also that it's going to take a lot of money and a lot of time for them to get back to that spot where they were before. But since I have a long-term view, I do have full confidence in the management right now, especially what I've been seeing throughout this year, that they are on the right path ahead. Obviously, this is not a huge growth stock like Nvidia or like AMD, but I do believe that this is a stock that will go under the radar for the next couple of years because it's not as attractive as others. And in the meantime, I'm collecting those dividend payouts, so I'm okay with that. Again, I know the risks, but I also know the rewards. And that will be it for this video. Let me know down in the comments below what semiconductor stock you own. I know a lot of you love AMD, Nvidia, and ASML as well. If any of you do hold Intel, please let me know down in the comments below. And if you like this video, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always guys, take care, stay safe, and see you all in the next video. Bye bye.